Hi guys, welcome back to the Financial Interests YouTube channel. My name's Dan. So if you're new to the channel, I cover personal finance, stock market investing and stock analysis as well. In this week's video, I'm going to cover how to read an income statement. So let's get on with the video. So being able to understand the financial statements is one of the most important things you need to do as an investor. The financial literacy is the absolute key to being able to understand what a business is worth and project the values out into the future. And you'll also hear the income statement called the profit and loss statement. So what it's actually going to tell you is all of the money that's coming in, and this will be generally called revenue or sales. So we'll see this, all of the money that's coming in versus all of the money that's going out, which is our expenses. And then from this, we'll be able to see whether the company is making a profit or a loss. And when companies report the financial statements, they will either do a calendar year or a fiscal year. So in the case of a calendar year, that's quite simple. They'll just report from the beginning of January till the end of December. But then you might also find some companies will report a fiscal year, so they might have their year starting in September. You'll see this. I think Starbucks do this. Apple also do this. So they'll have a fiscal year that runs up until the end of September. So the three main statements we need to look at are the income statement, the balance sheet, and the cash flow statement. So what you need to remember with this is the income statement will give you a picture over a period of time. So in the case of the annual filing, it will give you a picture of the income and the expenses over a period of 1 year. And the same if you're looking at it for the quarter, it'll give you a period of 3 months. But it won't show you where the money was spent. For that, you need to kind of look in the cash flow statement. It will just show you your income and your expenses. And the balance sheet is actually a snapshot of what the company owes and what it owns. So it will be a picture of a specific moment in time, which will be like the end of the year. So you'll have your assets on one side and then your liabilities on the other side, and you just need them to balance. But I'll be looking at that in a future video. So when we're looking at an income statement, first we start at the top, and this is why you'll kind of hear it called the top line. So the top line is our revenue or sales. So this is all of the money that we've got coming in. And as we work our way from the top to the bottom, then we'll start deducting the expenses. So the first set of expenses we have is known as the cost of revenue or the cost of sales. And this is the direct cost of what we need to pay to actually produce the product or the service. So if you look at it from a point of view like Starbucks, they need to buy the coffee beans. That's one of the direct costs of actually producing the coffee. So the coffee beans, the milk, any of the sandwiches that they make, all of the material for that, that's a kind of direct cost relating to the sale. So after we've removed the cost of sales, then that leaves us with the gross profit. And after this, we need to deduct the other expenses to actually get to our operating income. So these are other expenses which we have to incur in order for the business to run, but it's not directly related to the sale of the product. So this might be selling, general and administrative costs. That's also known as SG&A. So that might be people who work in admin. They're not directly selling the products or involved in that, but maybe they're doing the marketing, or it's costs for the buildings and things like that. So these are also expenses that need to get deducted. And after we've deducted these expenses, then we get to the operating income. Then we need to deduct income expenses and also provision for taxes. So this amount is actually before we pay tax. And after these amounts have been removed, then we get to the net income, which is also known as the bottom line. And this is where we'll see if the company's actually made a profit or made a loss. So we'll go and take a look at Amazon's income statement from 2020. So I've gone to the Amazon Investor Relations website and then clicked on the 10K. So this is the form annual report from fiscal year ending December the 31st, 2020. So here I can scroll down and it'll give me the table of contents. So what I'm looking for here is the financial statements and supplementary data. So I'll just click on that. And then this brings me down to the index, and we can go here to consolidated statement of operations. Now, this is what you will also hear the income statement called as well. You might hear it called statement of operations. So we can look here. Obviously, in some of these, you will see them the other way around. So it will start with 2020 on the left side and then moving down from there. But Amazon has got this going 2018 moving to 2020 in the other direction, which is kind of good because it actually, on this one, it actually shows us it's easier to see how it's growing. So here we've got net product sales and net service sales. So they basically divide their sales into two sections. So we can take a look at the sales and we can see the total net sales here is 232,887, and this is in millions. So this is 232, nearly 233 billion. And we can see that the sales is growing each year. So we've gone from the 233 to 280 to 386 last year. And now we come down to our operating expenses. And here we have our cost of sales. So we can see that the cost of sales is also increasing year on year. And actually what we want to know is what is included within the cost of sales and what is this fulfillment part. So we can actually do Command F, or I think it's Control F if you're on a PC, Command F if you're on a Mac. So we can actually search what the cost of sales, and it will bring up 19 places where this is actually mentioned in the PDF. So in this part, we can see it actually tells us what the cost of sales is. So here we can see purchasing of the consumer goods and the shipping costs as well. If we scroll down, we will also see what the fulfillment section is. So the primary costs of fulfillment consist from their operations in North America and international fulfillment centers, and this is physical stores and customer service centers as well. So that's useful to know how the breakdown is there, because that tells us that we need to take our cost of sales and also the fulfillment, because this is also a part of the cost of sales. And we can see here also it mentions in fulfillment that Amazon Web Services costs are primarily classified as technology and content. So now we can go back to this and we know that our operating expenses are our cost of sales and the fulfillment part. So later on I'll show a spreadsheet where you will see that that's added together. So this is part of our operating expenses there. And then we can deduct that from the net sales to give us our gross profit. And moving down, we've got technology and content, marketing, and the general and administrative costs as well. And that brings us to the total operating expenses here. So for this year, we can see that we've got total net sales of 386,064, and the actual total operating expenses here is 363. So this gives us our operating income. If we minus the 363 from the 386, that gives us our operating income of 22,899. And then you'll see there is also a line for interest income. So this could be interest on any investments that they've got as well. This is coming in as another set of income. And then interest expense would be the interest payments on any loans or where they've raised capital. And then we get to our income before taxes. Then you have our provision for taxes. And this brings us to our net income, or bottom line as it's known, because it's the bottom line of the statement. And we can see that this has also been growing year on year and grew significantly from 2019 to 2020. So we've gone from 11,588 to 21,331 there. And it will also give us our earnings per share. So we can see that the diluted EPS has also been significantly increased as well. So I'll just show you an Excel file where I've just put the data in myself, just so I can kind of look at the margins and things like that. Here we've got the data that I've taken from the report. This is where our cost of sales, and then we can see how our gross profit margin in 2018 was 25.6, then moving on to 26.6, and we're down slightly from this year, 24.4. But the real thing I'm kind of concerned over is just the net income, and we can see that that's been a good increase over the past year, going from 11,588 to 21,331. But what you'll notice with Amazon in particular is they have a really low net profit margin, because the part of their business concerned with delivering products, and which is the main part of their business, obviously that's got significant associated costs with it for logistics and things like that. So that's why you can see that they've got really low net profit margins. But they actually break it down further in their 10K, so we can actually go and look at how that they split down the revenue as well. So the revenue they make, they split into segments. So they have North America, International, and also Amazon Web Services. So this shows us the operating income. So this is basically what we've got left before we're paying the taxes. And actually, if we look at 2018 and 19, for International, that actually made a loss. So you'll see where it's got brackets around it, that's actually a loss. And what I've actually done here is put this in a spreadsheet as well. So in this spreadsheet, I've got the data that I've just taken from that. And what we can see is in North America, we can see the net sales, and this amount is increasing year on year. But what's interesting is the sales. So for this year, North America made 61.2% of the total sales, and that contributed 37.8% to the actual operating income. But if we look down here to Amazon Web Services, we can see that although they're only making 11.8% of total sales, they actually account for 59.1% of the operating income. So this means that obviously Amazon Web Services is like really high margin compared to their other side of the business, which is more concerned with the logistics. So if we see here, nearly 14 billion of this profit was actually just from Amazon Web Services. And then we can see here the totals down at the bottom as well. And what I'll also do is I'll go to Yahoo Finance as well. And if you go to the financials part, it will give you the breakdown as well. So I've just made sure that my numbers that I've got match up here, which they do. So we can move down and see the revenue, cost of revenue, gross profit, and then you've got your expenses moving down to your net income. So the main thing that I'm looking for in the income statement is the top line growth. So I want to see the sales growing each year. And also I want to see the bottom line growing relative to that as well. So this is where we need to look at the net profit margin. I want to see that the margin at least stays the same, or like ideally it can be improved as well over time. What I don't want to see is the sales might be still growing, but actually the profits are shrinking. So that might tell me there's something wrong with the business. So that's one of the key things I always look at when I'm looking at the income statement. And finally, I'll also look at the earnings per share as well. So that's it for the video. I hope you enjoyed it. If you did, please give us a like, and also consider subscribing to the channel as well if you haven't already. It really helps me out as I'm trying to grow the channel as well. And also, if you have any questions or comments, please leave them below. It's always interesting to know what everyone thinks about the videos, get feedback on what future kind of content you want to see. And just let me know anyway in the comments below. So thanks for watching, and I'll see you in the next video. Cheers.